Gold prices have hit another record, while the US dollar has been stepping up its pressure on other currencies. The popularity of these two assets pointed to one common trend: more and more investors are opting for safe havens. Recently, volatility in even a limited daily range has become a regular situation, so we can only imagine the roller coaster that trading charts might display in the coming weeks. First, the non-farm payrolls report for October will be released, which could rock the boat significantly. Then, on November 5th, the new US president will be announced. Although the election race is nearing its final stretch, two experts can confidently predict the outcome at this point. The same uncertainty surrounds the forecast for the next Fed Reserve interest rate decision, which will be unveiled on November 7. However, trading in the markets continues under any political and economic conditions, of course with the forecast in mind. For instance, on a betting website, Donald Trump's position currently looks increasingly favorable. As a result, economic prospects are shifting towards a potential rise in the US inflation and moderate rate cuts by the Fed Reserve in the coming months. This, in turn, sets the stage for the US dollar strength, which is already advancing due to the geopolitical concerns. As a result, its index, which tracks the greenback's value against 6 rival currencies, reached a peak on Wednesday morning, the highest level in the past 2.5 months. However, if the markets grasp any signs of a Kamala Harris victory, the US dollar is expected to have an inevitable pullback. Nevertheless, this retreat, if it happens at all, would be modest in the euro-dollar pair. The reason is that after 3 rate cuts totaling 85 basis points, the European Central Bank does not plan to stop. Such a statement was made by the ECB president at the press conference following the regulator's last meeting on October 17. Besides, during her speeches at the IMF summit yesterday, Christine Lagarde literally repeated the statement word for word. Considering that the markets had already priced in this scenario for the euro earlier, the single European currency did not weaken notably yesterday. However, the euro-dollar pair broke through the critical support level of 1.2800. The instrument is trading today within the range of 1.2784 to 1.2810. Moreover, forecasts for the euro remain pessimistic. The next support level is now seen at 1.2750. Traders should keep in mind that the euro's position will mostly depend on the strength or weakness of the US dollar in the next 2 weeks. For example, the dollar is currently overbought. Therefore, its strengthening against the euro is largely symbolic. For the same reason, the forecast for a slight rise in the euro remains relevant, as the euro-dollar pair needs some correction. If this scenario comes true, the euro may attempt to break through the psychological level of 1.0900. This opportunity could arise as early as today, when the so-called Fed Budget Book will be published during the New York session. With an almost empty economic calendar, its release could become a high-impact event. The document provides an overview of the situation across 12 Fed Reserve districts in the United States. The Budget Book is expected to confirm a slowdown in economic growth across the country. As a result, the US dollar could move into a much anticipated correction, giving the euro a chance for a slight strengthening. Oil prices received a boost from a Beijing yesterday, following the People's Bank of China's announcement to lower the interbank lending rate. Brent crude prices surged from $74 to $76 per barrel. Investors likely assumed that this decision would increase the yuan's liquidity, thus raising demand for the oil from the world's largest buyer. Naturally, markets are closely watching developments in the Middle East, where the situation could deteriorate at any moment. As a result, oil prices are ready to climb against at any time. But for now, as the region remains relatively calm, oil is responding to economic data. The 1.6 million barrel increase in inventories as reported by the American Petroleum Institute, has held the price within the daily range of $75.20 to $76 per barrel. If the U.S. Department of Energy today confirms the fact of an increase in its oil inventories, analysts do not rule out the possibility of a pullback in oil prices. The Russian ruble will be influenced by the BRICS summit in the next couple of days. So far, no major announcements or significant decisions have been made at the forum that could lead to serious economic consequences. Therefore, the ruble remains stable for now. Keep an eye on the news coming from the summit. Today, the ruble's position depends entirely on these developments. That's all for today. If you monitor developments in financial markets, subscribe to our channel and stay up to date with the latest news. See you tomorrow!